Warren Buffett retires, what it means for the market and you. After 6 decades steering the helm of Berkshire Hathaway, Warren Buffett, the Oracle of Omaha, has announced his retirement as CEO. At 94, he leaves behind a legacy that transformed a struggling textile company into a $1 trillion empire. Just 3 days ago, Buffett gave his final speech at the annual meeting. Not only a farewell but a profound message to every investor who has ever listened to him. And one subtle detail left analysts buzzing. Buffett's legacy isn't just wealth, it's wisdom. From humble beginnings, he built Berkshire into a fortress of long-term investing. A single dollar invested decades ago is now worth over $50,000, far outpacing the S&P 500. As we shared in our previous video on Warren Buffett's investing philosophy, patience and simplicity were his greatest weapons. If you haven't seen that one, make sure to check it out after this video. It'll give you a deeper look at the mindset behind his empire. But beyond Buffett's personal farewell, one jaw-dropping detail stood out. Berkshire Hathaway is now sitting on over $347 billion in cash and short-term treasuries, a record high. Is this a sign of cautious optimism, or something deeper? Could Buffett and his successor Greg Abel be preparing for a major market crash or opportunity? Remember, Buffett once warned, "Only when the tide goes out do you discover who's been swimming naked." This cash pile might be his way of preparing for low tide. As Buffett steps down, Greg Abel is set to lead Berkshire forward. While Buffett will remain as chairman, the day-to-day decisions will rest on Abel, a quiet but capable operator who has earned Buffett's full trust. Abel has a tough task ahead, preserving the culture of rationality and long-term vision in a world that's increasingly obsessed with short-term gains. Buffett didn't shy away from talking about mortality. He paid tribute to his late partner Charlie Munger, calling him the architect of Berkshire's culture. It was a touching, sobering moment, a reminder that even legends fade. But their ideas, frugality, clarity, patience, remain immortal. Buffett's parting words weren't about flashy stocks or economic forecasts. Instead, he left us with timeless advice. Avoid reacting to market noise. Don't let tax decisions distort good investing. And beware of AI-driven scams and deception. He urged investors to stay rational, especially when the crowd is not. Now that Buffett has stepped back, what lies ahead for Berkshire Hathaway, and for us, the individual investors inspired by his journey? Will the next generation of investors uphold the values Buffett lived by, or will we chase volatility over value? With $347 billion in dry powder, Berkshire isn't just rich, it's ready for chaos, ready for opportunity, and maybe, ready to catch the next big wave when others are too scared to paddle. Interestingly, even with the market dipping in April, Buffett wasn't moved. He made no major moves, no big buys, no panic selling. That silence speaks volumes. To many it signals that Buffett doesn't think the worst has hit yet, the real storm hasn't arrived yet, and based on his positioning, some believe Buffett expects a major crash within the next 5 years. But his real message isn't about hoarding cash or timing a bottom, it's about staying rational when the world isn't. Because in the end, markets recover, but temperament decides who wins. So, as one of the greatest chapters in investment history closes, we leave you with this question. In a world full of hype, what's your version of value? Are you investing with patience, or reacting with fear? Subscribe for more deep dives like this. And if Buffett's words moved you, drop a comment. Let's keep the conversation going. Till the next video, thanks for watching, have a nice day.